Well, hello everybody, and welcome back to the channel. It's Mike Brown here with Remax in Toronto. Missed it by that much. Yeah, just at a time when it seemed like the real estate market was kind of self-correcting. Prices were softening, especially out of the central core of the city. Inventory is abundant in both the freehold and the condominium segment, and interest rates are coming down. Things were looking like the market might kind of recalibrate. Well, a couple of days ago, the federal government, in its infinite wisdom, has decided to throw a wrench into those plans.
Oh, come on!
And I suspect a lot of it has to do with their bid for reelection.
You think?
Previous to a couple of days ago, if you were a first-time buyer in need of an insured mortgage, meaning you had less than 20% down, you could purchase a property up to $1 million. Well, apparently that's not realistic anymore, according to the government. Now you are allowed to buy up to $1.5 million for your first property if you have less than 20% down. That sounds like a good plan. No. Incidentally, you can buy a house in the city of Toronto for less than $1 million. Might not be in Rosedale. It might not be turnkey, fully renovated. You might have to put some, what we used to call sweat equity into it.
That's ridiculous.
But it was happening and it was available, and I'm not so sure that's going to be the case in the new year because this new mortgage regulation is supposed to take effect, coincidentally, on the 15th of December. A little Christmas present for first-time buyers here in the country.
Santa?
It seems to me that the government is now basically saying, hey, why don't you, as the first-time buyer, the young person looking for your first home in this country, why don't you hop into the same boiling pot of water that we currently find ourselves in? You know, they said they were going to solve the housing crisis by building more homes, and we all know that's not quite so realistic. I don't know if you're aware of this, but the federal deficit 10 years ago for this country was running at about $650 billion. It currently sits over $1.2 trillion. Now, I know part of that was from COVID, but believe it or not, part of it is from irresponsible governance. And it's costing the federal government about $1 billion per week to service that debt. So everybody's hoping for interest rates to come down. But it seems like that philosophy is being passed on to the first-time buyer now. I mean, who in their right mind is going to put, I guess, a minimum of $125,000 down on a $1.5 million purchase? I mean, you're really leveraging your financial future with that move. And you don't have to. You don't have to get a 30-year AM, and you don't have to spend $1.5 million for your first property. And incidentally, at today's current mortgage rates, if you were to max out that purchase with a minimum down payment, you're probably going to need to earn about $330,000 a year just to qualify for that mortgage with the current stress test.
I don't have that kind of money.
And if optimistically interest rates fall, like we all anticipate they are going to, let's assume you're getting that mortgage at 3.5% as opposed to 4.5%. You're still going to need to make over $275,000 to be able to qualify for that mortgage. You know, recent articles in the news are saying that Canada has reached an all-time low for productivity, that too much of our GDP is reliant on real estate.
It's good. Yeah. It's going to be good. It's going to be good.
Well, it seems to me like the government is just doubling down on that philosophy, and I don't think it makes sense for us. As a realtor, an experienced realtor, over the years, and especially in the last year or so, I've seen the effect of lower immigration and fewer students coming to the country affecting the markets outside of the city.
Please don't do that.
And I think that's a trend. I don't know if this is the time to be encouraging first-time buyers to go after a larger mortgage. So, first of all, I think it'd be good for us to sort of run down what those numbers actually look like if you were to max out your mortgage by purchasing a property for $1.5 million. If you were to put the minimum down payment of $125,000, and that's based on current mortgage regulations. So currently at $1 million max purchase, the first $500,000 you can put 5% down, and the remaining $500,000 you need 10%. So if we go by that rule, you'd need a minimum of $125,000 down for $1.5 million purchase. The insurance premium for that mortgage, which would be $1,375,000, would be an additional $55,000. And don't forget, on closing, just like land transfer tax, you're going to pay 8% GST on that premium in cash. So that's another $4,000. But at the end of the day, your mortgage will be $1,430,000. At 3.5%, at the end of the 5 years, you will have retired approximately $147,000 in principal. So your mortgage is down to about $1.2 million and change. And you'll have paid the bank $236,000 in interest. Now, for things to get equal on the principal and interest prepayment, the mortgage rate is going to have to drop to about 2.5%, at which point it's not such a bad deal. But at current mortgage rates, a lot more is going to the bank than is going into your pocket or retiring your mortgage. And let's face it, the number of people who got into the real estate market for their first property or for an investment property were taking advantage of ultra low rates because these numbers were reversed. You were retiring more principal monthly than you were paying in interest, which has not been the case since the Bank of Canada started to raise rates.
Really?
So this seems like a pretty dangerous move to me. And I'm curious to know what you might think of it. If you have something to say that you'd like to share, post it in the comments below. Well, it's time for that inventory story, and much as anticipated, the inventory numbers are rising, and I think it's fair to say that we're going to hit a new peak by the next episode, so within the next 2 weeks. Let's have a look at those numbers. Hey everybody, once again, thank you so much for tuning into the channel. Check out the website, RE Inventory TO, if you want to track these numbers. And until the next episode, this is Mike Brown, uncovering the real state of real estate here in the GTHA in Southwestern Ontario.